Alrighty, perfect. Time to get started. Let's do it, everybody. Welcome. Good morning. Happy Monday. Happy Ides of Monday. This is a very, very interesting week from a lot of perspectives. Real quickly, we already had the bulk of the morning earnings announcements. No massive surprises one way or the other. The market didn't have a lot to react to, but just really important to understand. We've posted about this pretty much everywhere. A huge chunk of the S&P reports this week, and so literally anything can happen around that. Just look at what happened, for example, in the previous weeks. If one major component had a bad report, like Goldman, for example, it screwed up the correlation and the YM for a couple of days. So anyway, that is important to keep an eye on. And obviously there's some coming after the close as well. And there is a document in the pit. Let me bring it up real quick that you can see the big names on that on. Tom was kind enough to post it for us. This is it right here. So after the close, there's some big ones coming. Tomorrow morning, there's big ones coming. It's all week. There's huge names pretty much every day. Okay, so just be aware of that and, be nimble. That's important. Economic calendar. Guess what? Also crazy and busy. And, there's some really obvious, really big things. FOMC is Wednesday, NFP is Friday. We have live sessions scheduled for both of those. Having said that, here's the kind of calendar of all the larger stuff for most countries and larger countries anyway. And if you just look down these lists, there's some other really big stuff going on. And some of it hits in the morning before the US opens for regular trading hours. Pretty much every European country has major reports this week of one kind or another. And there's some other smaller US reports besides FOMC and NFP. For example, consumer confidence on Tuesday, and the weekly numbers on Thursday. This could just be a cluster frack of craziness between the news and the earnings reports. So just keep that in mind. Stay very nimble. All right, let me bring up. This is the daily view across the last 2 years, and hasn't changed much since we talked about this last week. And kind of for context, if I bring over the TPO view and kind of put it next to it, you guys can see, we traded out of the recent range, and guess what? Today, this overnight, we traded right back into the recent range that we've seen, and we left some single prints in the overnight, but there's some other artifacts around. There's still an old one above us that we just missed taking out on Friday, and there's some below us. Anyone telling you they can predict what's going to happen this week or in the near term in the market is full of it. This continues to be a scalpers kind of market. In other words, I'm not saying yet we all have to be scalpers, but your mentality on how you manage trades, you have to think that way. It has to be momentum based, and there could be levels in play, but you really can't try to predict what's going to happen at those levels until we get there and you see how they trade. We saw some really strange things last week with huge deltas, probably other time frame traders, but just artifacts like that should get your attention from the point of view of being very nimble and careful, and don't just go with a setup because you think it might work. This is a really good time to be really patient and really particular about the setups that you're choosing to take. Having said that, it's a real good segue into the hedge fund call. I was late to get on it, and I got caught up quickly. And basically, I don't want to say nothing's changed among those guys, but it's the same story this week, obviously. Event-driven market, big news items coming, and lots of economic releases and earnings to push us around. But it's important to understand something about these conditions right now. Here's the volume for the overnight, 229,000. Ridiculously low again. And, we've talked about this on every hedge fund call. when there's something to trade, the volume goes up really fast, really dramatically. And so it's not like nobody's participating. It's like they're being really selective. And that's just a really, really good idea to keep in mind under these conditions. There's been some really great momentum moves and great setups, and they're tradable no matter what your style is. But you really have to protect any profits you have and be really nimble. The conditions are changing a lot and quickly, and that's just the nature of what we've got right now. Let's see. I do want to show you. Most of the TPO views look roughly similar. As far as we're pulling back into the range, here's NQ, kind of the same story. YM as well, RTY as well. Let me switch over to my other monitor real quickly, and we can look at the overnight structure. Oh, come on, where is the zoom toolbar? It has hidden itself again. There it is. Okay. And so we'll go over here and okay. Far left are the sessions for ES and NQ. The NQ one is crunched 4-1, just so we can kind of get an idea where the volume is. We're building a high volume node at the low. This started a couple hours ago. We came down, we traded down to this spot, and we're just building volume. The previous session had a big price rejector just a little bit further down. So if we take out the overnight low at the open, that could be an interesting spot to watch. Similar in ES, this is the ES profile. It looks almost exactly the same. Big chunk of volume down here. Look at that big giant delta up there. How big was that? Wow. Minus 2,000, and it's above us. So, trade accordingly. I don't know. I know Lee's has lost his voice. So if you have comments, Lee, why don't you stick them in the chat on any of this stuff, and we can make sure everybody rolls those in as well. The far to right panels are the 30-minute panels, just to kind of see the rotation, and it's been relatively quiet. There was a little earlier in the morning, there was some good scalping around the earnings, but we're pretty much going nowhere at the low and building volume. So, that. Okay, that portends an open that you want to be very careful on. And so let's segue from that. Can you stretch your finger? Oh, you're talking about Lee. Okay. Anyway, let me get back on my main monitor, and I want to show you guys a couple other things. And then we will be pretty much caught up. I'm trying to just go through this real quickly and make sure I don't miss anything. So hang on, let's get back over on my main screen. Okay, now, there was, let's see, on stops, the high, lowish absorption at the low. Okay, yeah. There was something about that I was just going to show, and I totally lost my train of thought. Give me a second. I will find it. Oh, I know what it was. I was going to go to the TRG calendar, which I have queued up, because this is actually a good situation for the schedule we have today. We have Ides of Monday. Obviously, we're doing that right now. And then I've got the Scalping the Dumb session at 11:30 Eastern, 8:30 my time. And this could be a really good day for that particular session, because it'll be, we'll have made the initial balance and traded away a little bit. And so we'll have an idea what's going on for the morning. So that should be a really good session, good day for it. Tomorrow we have the How to Get to Withdrawal class on evaluations. And, if you just got funded, there's a huge number of people in TRG that just got funded in one place or another. And the vast majority of people will blow up their funded accounts fairly quickly. And we don't want that to happen with you guys. So we're going to do a class on your mindset and your tactics for staying funded and getting to withdrawal. It's, the statistics, like I said, are horrible, but it's really not that hard to do. I have done it. We have a couple of TRG people that have done it. And it's important to understand the change in your mindset between, getting through the eval and then preserving the funded account. They are different, and we will discuss that in depth. So join us for that. Wednesday is I think it's the same Wednesday schedule we had last week, except I've got a FOMC ad hoc added. We've got the dojo. at 11 Eastern, and I'm doing the trading the open 5 minutes before regular trading starts. We are going to continue for that particular session what we've been doing the last 2 weeks, which is really going well. I'm gonna open up right on schedule, sometimes a little bit early, and we're going to talk about the pre-open. Then we'll see the open 5, the transition from the open 5 into if there's an opening drive and the break of the 15-minute range, which is turning out to be a really good little setup, particularly if the open 5 didn't really go anywhere. There's a really good opportunity on the 15-minute break. So we will go through that. And as I said, the dojo will follow, and then we have FOMC. Thursday, I believe, if I'm not mistaken, on the fishing trip, don't we have a guest presenter, JVC? Is that?
It's not quite a formal guest presenter, but I'm going to talk about the new, I guess, footprint approach I'm using, which is stripping all the numbers away except for the extreme 3 levels, and I'll just basically show how what I did. I'm not going to do a whole session on how to do this in Sierra chart or whatever, although maybe we could at some point. But just going to talk.
You're talking about the structural ranges session, or which one are you talking about? Fishing trip. Okay, yeah, that's the structural range fishing trip. Okay.
Or that's right. He does call it that. Yes, I forgot. Yes.
Yeah, and then there's a statistical ranges class after that. That's going to be late, right?
Yes, correct.
Yeah. Okay, cool. And then Friday morning, we have another ad hoc, the NFP. These are always a blast because it moves so much, and there's usually a really good fading opportunity. Just as a pre-announcement, I plan to be really aggressive on this one. A lot of times I talk about it, and maybe I'll put a couple of limit orders and let it try to come to me, but I decided it would be fun to show you guys what it looks like to really go after that movement if we get it. And so that's my plan for the NFP session. And then we will do Dino's recap. Don't have a topic yet for the psychology second part, but I will post one in the pit. And then the gaming the close. I've had a couple of good questions about, I don't know if the people asking them were in this session, but let me answer one quick question. Somebody asked me, because the open 5, is a very predictable price discovery event, they asked me if there was a closing 5. And that's a really good question. The answer is no, but there is a closing pattern. We talk about it every Friday at an hour before the close. It has to do with the settlement of the equities versus the futures, because the equities close first, and then there's the settlement, which goes another 45 minutes. And that's the opportunity on closes is that there isn't really price discovery. In fact, there's kind of the opposite, as we tend to get in a really, really tight range right as we go into closing, because there's so much volume right there. And so anyway, for the people that were asking me about that, join us Friday, and you can also check out the recordings in the library. We've had a couple of really, really good sessions around that class. So let's see.
I think that pretty much gets us there.
Yeah, that gets us there. There's one other conversation on the hedge fund call that I thought was interesting. Remember last week we had this little poll about, what would we get to first, 4,200 or 3,800? Mm-hmm. And today we were briefly talking about how, so the January barometer, we talked about this a few weeks ago, however January goes, so goes the year. Well, January, what's going on? Is this a down and up? It's a really tricky set of conditions. And I just, listening to professional traders and, large professional traders, which are the guys in the hedge fund group, and just listening to the consistency in their philosophy during these kinds of conditions. And it's like every single call, every Monday so far, it's the same idea right now. And I think this bears respecting. I mean, I've said it and I've repeated it and we've talked about it, but I'm going to emphasize it because I think this is really important. This idea that this is an event-driven market, and, the volume just, again, it's still 235,000. We're, 45 minutes out from the close. That's pathetic. So, I I think this is a fairly substantial difference from the conditions over the last few years. I mean, not I think it is a substantial difference. And so a lot of people might be a little out of sync with it. And so I think it really bears emphasizing, this is a great set of conditions to be really patient and sit on your hands. I think everyone kind of gets that. But you also have to be ready to react, because when there's a good opportunity, it comes really fast. And then all of a sudden, there's just a ton of volume in that opportunity. And it can kind of leave you, frozen from this sudden action. I felt that a few times myself. And we briefly talked about this on the call. And those guys just keep going back to, hey, we're opportunistic and on the sidelines with our fingers on the trigger, and they don't hesitate to pull the trigger when something sets up. So I just, I keep hearing this every call we have in the last few weeks. And, for those of us that don't live in that world, I think this is really, really good insight to the way to trade these conditions, because, for example, contrast that with the, every time you get your setup, take the trade, which is the typical philosophy of a profitable, consistent setup. You got to take it every time it sets up, or the statistics don't work. Guess what? Under these conditions, it's my opinion that is not a good strategy. It's a better strategy to sit and be really particular about your setups, rate them as you're seeing them. And then when you get a good one, be prepared to just instantly jump on it and no hesitation. And you'll find you can make some good money. I really believe that. So let's see. There's a couple of comments. Let's get them real quickly. Donnie, there was talking heads on CNBC saying the liquidity will continue to leave the S&P over. All right. I don't listen to anybody who talks on CNBC. I don't watch it anymore. I think you're hearing people's paid opinions, but I do understand that, and that's probably true, but we'll see. Let's see. Comment for them: when something sets up, this value related or volume order flow chart related. It depends on who we're talking about. The guys that trade the biggest money, and this is a really good question, Lee, the guys that trade the biggest money on the call do both. They have value related trades they do, and they also trade around short-term events because, they're in a position to do that. They don't combine the two. The kind of value related trades tend to be set up to go off if something happens. And if it doesn't happen, it doesn't trade. But they do trade discretionarily, and a lot more aggressively than I used to think. And so that's kind of been a surprise for me over and over again. And, again, it depends on who we're talking about. On the call, there are also, exactly. And let me just clarify, for those that are guests in the call today, I've explained this before a few times, but I didn't do it this morning. This hedge fund call that I go on consists of up to 17 people. There's usually 14 or 15 of us. I'm just a friend of the people that do it. I don't run a hedge fund, but the guys that do, we have a couple of guys that sit on derivatives desks at major banks. And then we have guys that are family funds. It's the small hedge funds. And there's a couple of people there's a guy in Beijing that I call him the Brahmin. He inherited $1 billion. He's got $1 billion trust fund, trades his own money, and he's actually pretty good. I've traded with him. He's been a trading partner of mine in the past. So that's the kind of people. So yeah, it's a very diverse group of people that sling a lot of money, but and we don't talk about specific trades. Obviously, someone working at an investment bank can't do that, but we just kind of chit chat about philosophy. And then when the Formula One season's going, we're all Formula One fanatics. So we talk about Formula One, and that gets going again in just about a month. The cars are being released in this month. Races start again in March. So anyway, that was good that I clarified that. That's important. And the guys that are on the derivatives desks at the major banks, they're really interesting to listen to because, they have typically a lot of different strategies going at once. And so they tend to try to keep a very macro view. And I think their macro view at the moment is a very good thing for us to consider, being really nimble but being prepared to take opportunities really quickly when they set up, because there's been some really, really good opportunities. Anyway, thanks for asking that. That was a good question. Yes, and they have tools in their bag, Amy, that we don't. That's very, very true. But, the philosophy of trading is always the same. Depending on your tools and, how much money you're slinging, you can trade tactically a little different. But For this time of year, if you haven't been in the market a long time, looking at the volume, for end of January going into February to have 200,000 contracts trading right before the open is just ridiculously low. But then at the end of the day, the volume will be, low normal. And so where's it coming? It's coming in bursts. One other thing I wanted to ask you guys, with respect to our calendar, was there something, a conversation about an options fishing trip or something, or Tom doing a presentation on the one day?
Tom said he wanted to say something, I guess, about zero DTE options on the fishing trip. I don't know anything other than that.
Okay, so that'll be discussed this Thursday, though. He wants to.
So I don't even know the specifics.
Okay, yeah, I don't either. That's why I was asking, but that's a really interesting subject right now. I brought that up briefly on the call just to ask what the opinion of the impact of that was among these guys. And a bunch of them are trading them very aggressively, and they think the impact is substantial. And they think it's adding to the kind of hits nature of the setups. And it's certainly pushing the ranges a little bit. There's no question about that. So anyway, I'd be interested to see if Tom, I notice he's not here right now, but if Tom is available and shares some info on his point of view, having come from the options floor back in the day, I'd be interested in his opinions and thoughts on that. So we'll let you know if that's going to happen, hopefully Thursday. Anyway, that is everything. So we can go ahead and wrap up. Are there any questions, comments, burning desires? Lee, anything you want to add? JVC, anything you want to add?
Nothing else from me other than make sure that you're booked on for tomorrow's getting to withdrawal session. That's going to be a really fun one.
Yeah. And really important. I got to tell you, with respect to funded accounts, I've blown them up. I've also gotten to withdrawal, and you really have to think differently for that first phase, from the point where you get funded to the point where you don't have the trailing drawdown anymore, because those bite. They will really bite you if you don't really manage your trades and your profit taking very, very carefully. So we'll talk about that tomorrow. Join us. All right. Thank you, Lee. Lee, I hope your voice gets better. Try honey in your tea. Supposedly works good. All right.
Sounds
cheers.
Like a plan.
All right. If I can find the button. There it is. All right. Thanks, JVC. We'll see you guys later.
Bye.
Have a good day.